Okay, well, it is the last day of 2009. It's been a tough year for the economy. So what can we expect in the new year? Lakshman Achuthan is a managing director at the Economic Cycle Research Institute. He joins me now with what you see in the next decade, or really in the next year and the next decade. But I do want to just mention you had called the recession. It was actually back in November '07 before we actually even saw one, or before there was any official record of that.
Right. Well, the recession started in December '07. It seems like so long ago, right? It's a couple of years ago. So here we are, and in the spring of '09, we really had a strong signal from our cyclical indicators. That's all ECRI does, is recessions and recoveries. And we had a really strong signal that the recession would end this summer. I think all the data that's been coming in since this summer has really vindicated that call. And the good news is we're going to start off 2010 with a continued recovery. There's no double dip or slide back into recession that's imminent. And that's all great news. We'll have some jobs growth. And so near term, looking pretty good.
And no new normal. You debunked that.
Yeah, that's the big surprise, I think, in 2010 isn't that the business cycle recovery will continue into the new year, but rather that this idea of the, quote, new normal, slow, anemic growth.
Right, growth below, let's say, 3%.
Yeah, it's very popular. I don't think that the world works that way. You don't get this kind of gentle, slow, anemic growth that's very predictable. Rather, if anything should have been learned, things get pretty volatile. And we're going to get, in our view, more frequent recessions than any of us can really remember in our lifetimes.
Define more frequent.
Well, let's say the last 3 decades, we've had an 8-year expansion, a 10-year expansion, a 7-year expansion. Those are, in the scheme of things, pretty long expansions. You're not going to see that again anytime soon. I think the next recession will be sooner than 7 years from now. And the reason I think that is because the pace of each expansion is getting weaker. It's like a plane losing altitude. And this has been happening for over half a century. It's nothing new. And at the same time, the volatility, the turbulence in the air is getting more. We're getting bigger and bigger swings. If you add bigger cycle swings and lower trend growth, you're going to dip below zero more frequently. A great example is Japan.
But we're going to recover out of those quicker then.
It'll be more violent, right? So you'll get whiplash more quickly. The big takeaway from this, from an investor's point of view, is buy and hold is dead. If that's what your plan is, it's really going to hurt. You're going to get a lot of drama. You're not going to sleep at night if you're doing buy and hold approach. The other thing from a policy point of view, I know there's been a lot of talk about jobs, right? We can't have the unemployment rate, the jobless rate, fall to where it was before this recession unless we have a 10-year expansion or thereabouts.
And you don't
I don't see that happening.
So then
I see the opposite.
You don't see then back to 4%, let's say, jobless rate.
Or even 5. I think that we are going to be faced with chronically high jobless rates in the years ahead. So that's a big challenge. The other really big challenge here, and it's on everyone's mind, is the timing of the exit strategy. You see quantitative easing coming off. Central China, U.S. all talking about that. When do they raise rates? If they don't get it right, it gets a little dicey. Yeah,
that is always the key question. That'll be what I'll be asking our guests, I think, for the rest of 2010.
Good question.
Okay, Lakshman, good to talk with you as
Thank
always.
you very
Lakshman Achuthan of the Economic Cycle Research Institute.